Hello and welcome back. This is Mike, the FX boss, and welcome to the class about how to trade trends inside the market structure. Alright, everybody, never forget that you are in a course, and also never forget that you are going to graduate from this course when number one, you have your chart set up and ready for trading. Number two, you have a strategy in place. You understand why you win, why you lose, right? Your strategy, which is going to show you, how you understand about probabilistic thinking, all right? And number three, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. And remember, the goal is to bring you from zero to a millionaire trader in 3 years, all right? So in an institutional way, with the institutional traders we know, it's not going to happen in 1 week. It's not going to happen in 3 months. All right, talking about like from really zero, you don't have any clues about how this market works. Okay, so, and again, if you have any questions, you can send me an email, to mikefxboss@gmail.com. And if you didn't receive the free manual, it's part of the course, but anyway, you can send me again an email. And if you want, this is new, so if you want to get the free ebook, the little book of trading secrets, please visit my website. It's fxbossfx.com. Okay, that being said, and so this is one of the big ones, right? Extremely important. And let's delete a few things, everybody. Give me a second. Delete. Okay. Remember, those concepts work on all time frames. Okay. So this is AUD CAD monthly chart, just an example. Don't worry, we're going to go to the smaller time frames too. Okay. Now, just quick recap. Okay. So the title of this lesson is how to trade trends inside the market structure. Okay. Now, charting first. Okay, just a quick recap. So for me to spot an up market wave or a down market wave, do you remember what we talked about in the previous lessons? So for me to chart and spot, like on the chart, the market wave, because I can make mistakes, right? I need to see. So up market wave, I'm seeing the first extension, so therefore I need to see first an uptrend. Market making higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. And then I need to see a change in the short-term trend, okay? I need to see a confirmed downtrend. Therefore I need to see lower low, lower high, lower low. Okay, this is about charting. It's so important. If I don't have lower low, so this low must be lower than the previous low. Okay, so if I don't see lower low, lower high, lower low, therefore I don't have a short-term downtrend. This is not a change in the short-term trend, therefore this is not retracement. Make sense? No, it doesn't. All right, so no, it doesn't. So if this is an uptrend and then I have something like this, just an example. So I have a lower low and I have a lower high, fair enough, but I don't have the next lower low, so I don't have a confirmed downtrend. And the market goes like this, higher high, higher low, higher high. This is then not a retracement. Okay, this would be a mistake. Those are black and white rules, not subject to interpretation. Okay, so if I would see this price section and chart as a good analyst, chart like extension, retracement, extension, you would do something different than me. Make sense? So this is wrong. If you're going to chart this extension, retracement extension, this is all an extension leg. Does this make sense? Oh, why? Because you have no confirmed downtrend. For you to objectively, and the keyword is objectively, for you to objectively spot extension or retracement extension, me and you, we must see a change in the short-term trend, right? You can write this down, it would be beneficial. Okay. So we are still here and it's retracement, lower low, lower high, lower low, lower high, until one day, you know, the market is going to stop retracing, the downtrend is going to stop, and then we are going to go higher high, higher low, higher high again. Can you see it? Exactly the same would be with the extension. If I don't see a change in the short-term trend, which is not confirmed, okay, so if this would be the example, if I'm going to buy right now, this would be what is called a premature entry. Oh, why, boss? Why? Because you don't see the change in the short-term trend. Can you see it? Now, we had a lesson, I'm going to post again at the end of the video, we had a lesson about how to spot relevant highs and lows. Okay? You, as a beginner trader, you're not a trader yet, you're still an analyst, you must understand how this market works, and you must not fall in the perception trap that just because you see higher highs, higher lows, that this is an uptrend. Does this make sense? Because charting on the downtrend, this was the relevant high, this was the relevant low, this was the relevant high, and this was the next relevant low. Does this make sense? So this blue or violet, if I manage, this violet, one more time, this violet, orange, alright, to make it better. So this orange uptrend that you are seeing, higher highs, higher lows, it's nothing more than a retracement on the red. Okay, I'm going to repeat one more time, try and pause for 10 seconds, try to really understand. So when you are charting and you're saying, oh, this is the red is the downtrend, relevant high, relevant low, rectangle, relevant high, relevant low, but then the market changes and make higher highs, higher lows, the orange one, it's a retracement on the red. And in this market it's pure logic. Guess why? Guess why? It's just a oh, but it's an upper. No, it's not. It's a retracement on the red. This market 7 times out of 10, in this example, it's still going to push down. Alright? Most of you, the beginner trader, you lose because, not because you're wrong on maybe direction, makes sense, like long term, but micromanaging the 15-minute chart, 1-hour chart, 4-hour chart, 2-hour chart, we get in those traps, and it takes some time for me to understand what is what. Does this make sense? Only and only when, this is pure logic, try to understand it only and only when, if this rectangle is the relevant high on the downtrend, only and only when the price action is going to make a higher high, only and only when the market is going to break this relevant high, only and only then you can say, all right, now this is the first extension leg. All right, this is now the first higher high, exactly the relevant one. Now the game starts on, all right, are we in the new extension? So now the game starts like, Oh, extension, retracement, extension, retracement. So higher highs, higher lows again. Relevant low, relevant high. See how this goes? How this works? How many times we fall into a trap thinking that, oh, this is the higher low, not on the trend. Okay? You can take a pen and paper and write, we have trends inside trends. Or maybe I should have maybe I'm going to record another lesson, right? So if you have difficulties, please write me an email like, oh, put also a specific lesson, you know. I mean, if you ask me, it's not that difficult, but if you have challenging times for you to understand like highs and lows and relevant highs and lows, I can produce a class like 1 hour, you know, for free, of course, you know. Oh, what about trends inside trends? For me to really understand like, oh, you know, so it's making hard highs, hard lows, but it's a retracement on the red downtrend. And even though I have here a higher low, that this in here is the relevant. This in here, whoops, this in here it's relevant, right? That one, it's still a higher low, right? See how easy it is to get confused, because I can argue right now, right? No, but it's this rectangle, it's lower low compared to that low. Agreed? I can start to think like this and see on the chart like, oh, but it's going to fall. It's especially when I don't see the future, right? I can think, oh, we're in a downtrend now, or it's a lower low, the market is going to reverse. Not necessarily. If you connect and I rewatch this lesson a few times, okay? If you connect the rectangles low to high, high to low, you're going to see like this. It's a 75% confirmed uptrend. Wouldn't you agree? Whoops. So we are here, right? Give me a second. There you go. Okay, so out, delete. So in conclusion, moving forward with the lesson, then in the next extension, the market again is going to make higher highs, higher lows, higher highs, higher lows, until the next cycle. You know, we can talk about market wave cycles. Until the next cycle is going to start. What does this mean? On the 1 hour chart, 2 hour chart, 4 hour chart, daily chart, the market, in order to move, it must wave. So the next cycle is going to start, right? What cycle? The retracement. Lower low, lower high, lower low, lower high. And so on and so on and so on, okay? And that's the game before the market reaches or the upper band or the lower band. Once the market reaches the lower band or the upper band, not on the 15-minute chart, it's too small, but on the monthly chart and the weekly chart, sometimes not even the daily, I would be very careful. Me as your coach, I'm going to say monthly and weekly. So once the market reverses the short-term trends, relevant highs and lows, on the monthly chart and the weekly chart, then we need to reverse. Alright? I'm going to put again the link on, I'm not sure if this or that side at the end of the lesson. It's going to be lesson, or you can rewatch the lesson number 1, what is the technical market structure, where I'm explaining to you what is the Forex market in its essence, you know, why are the monthly bands, import and export and so on. Okay, so this was about charting. Now, if you go on a chart, and we're going to do it every time a different lesson, okay? So this is so far it's NZD CAD, right? Okay, and if this is the monthly chart, then on the monthly chart, we talked about monthly chart, it's huge, so on the monthly chart we are not going to see short-term trends, we're just going to connect highs and lows. Okay, so high to low, low to high, high to lower low, low to lower high, high to lower low, low to lower high, high to lower low. Alright, very slow. This is charting now. Okay, now as you can see, the market made a higher high in here, but then the market did a lower low in here too. Can you see it? Alright, so if I do this, would this be okay in terms of up market wave, down market wave? Yes, no, maybe, I don't know. Alright, so this would be wrong. Okay, why is that? If I chart that this is a higher high on the market wave, then logically back in time I would expect the market to extension, retracement, extension. Agreed? Because it's an up market, so you have here the circle, it's a higher high compared to this one, so I would try to buy, right? I would try to buy, talking about direction. But as you can see, then if I would try to buy, I would most likely lose, right? Because it made a lower low. In this case, it doesn't happen every single time, but in this case, I need to readjust. Okay, what does this mean? I need to readjust the market wave that it's still going to push down, because lastly it made a lower low. Agreed? So if this is the high, and it must be a lower high. Agreed? And if this is a low, and if this is a low, and this one, this must be a lower low, and this one must be a lower high. So I'm going to read step by step. If you have questions, you know, send me an email. Anyway, let's see if we can satisfy the rule. If I put this high on the left, right? So if this is the lower high, can be this like this? You know, it can't, right? I cannot leave this. I cannot leave this high as a relevant one. Agreed? Why not? Because if I let this high on the chart being a relevant high, meaning me looking at charting, then this would be automatically a higher low. Agreed? So I must disconsider now this high, therefore I must disconsider this low too. Sorry, this low, the previous one. Okay, so I need to go like this. Does this make sense? If I do anything else, then I'm not going to satisfy the requirement that, oh, down market wave, high, low, lower high, lower low, lower high. After the high must come a low. Exactly. So if I take this low, if I chart like this, if this would be the low, just an example, if this would be the low, then the next must be a high, right? So I need to take consideration this high too. And after the, so can you see, we are back at the beginning, right? So the only correct way to chart NZD on the monthly chart, the market wave, would be for me to consider, oh, that's the low. Okay, that's the low, that's the low, that's the high, and then this is the low. So we have a confirmed lower lows, lower highs. Agreed? Okay, very good. Now, question for you. Talking about retracements, we need to see, not on the monthly, right? Would you say we are in a retracement right now, or are we in an extension right now? I don't know. Look at the chart. Do you see the market making higher highs, higher lows? Therefore we are in a retracement. Or do you see lower lows or highs? Therefore we are in an extension. If you said retracement, congratulations to you. You did well. Okay. Why retracement? Because the market's making higher highs, higher lows. Alright? I know what might be bothering you. You would say, oh, but no, not on the relevant. Fair enough. It's the short-term trend. Low to high, high to low, low to high. You know? Do you see the market making, especially in here, do you see the market making lower lows, lower highs? Do you see the market making lower lows or highs? No, right? So we need to address those things before we say, oh, retracement, extension, retracement, right? And so this would be one. Give me a second. Right. If we go to those three, weekly, daily, right? Okay, let's do a charting exercise on the market wave on the daily. And give me a second. I'm going to go back here and left click, right click, sync in, layout. All right. Okay, now this is a daily chart. You can do the same. Yes, unfortunately, if you are charting the 1 hour chart or the 4 hour chart, you must start with the everybody wants to be a millionaire trader, right? But when I tell you, oh, you must start to chart the 4 hour market wave from the upper band, or you must start charting the market wave from the lower band on the 1 hour chart, when the market is going to break multiple times the market wave, and it could take you between 2 hours to 3 hours per time frame to come to the most recent market wave. Then what? I did this. Makes sense? This is the difference between a professional and a beginner. And please believe me, I'm not judging. I'm just trying to be objective and tell you the truth, right? Everybody wants to be a millionaire until it's then, oh, you need to work hard, or you need to do this and this and that. In the advanced course, we're talking about building the weekly plan during the weekends. But everybody is having fun during the weekends. Do you want to be a professional in this business? Yes or no? Is that simple? I'm sorry to tell you, but this is the truth. Make sense? Until it gets, oh, I need to chart in the correct way and I need to go to the weekly band, to the monthly band. Not the weekly, to the monthly band, and I need to go on the 1 hour chart. Boss, what about the 15 minutes? The same. But it's going to take me 5 hours. Make sense? I know you, alright? I know you. You are going to do what I did too 20 years ago. You are going to be smarter than me, and you are going to say, oh, I'm on the 15-minute chart. I don't need to chart all of this on the 15-minute chart. I can start charting up in here. Fair enough. Being honest. I know exactly how. Please understand this. I've been a beginner trader. I've been an institutional trader. I've been a retail trader. I know everything about how you think. I know exactly how you think. You know, why would you waste being a beginner trader, not a trader yet, an analyst, being a beginner, why would you waste 5 hours or the whole Sunday afternoon charting the 15-minute chart market wave if you can spend 20 minutes and you can chart it in there? Why would you do this, right? I tried this, you know. Why? Because you can make a mistake, alright? Because me and you, we are assuming that the market broke the market wave on the 1 hour chart, 2 hour chart, 4 hour chart until in here. Alright, we are assuming, we think, but we don't have proof. What if I do this, everybody, and I did, I'm like you, don't worry, we're all the same. If I did this, I'm risking that I'm charting the market wave in the wrong way. And I did this. I lost and I lost and I lost and I lost until somebody checked upon me back in time 20 years ago and said, oh, but your market wave, it's against mine. You know, the senior trader, when I was an institutional trader, the senior trader said, oh, your market wave is against mine on the 4 hour chart, on the 2 hour chart. So, me being smart, not really, I need to go back, you know, I need to go back on the monthly bands and start charting from the monthly bands, the 1 hour chart, the 2 hour chart. So it was not 20 minutes, see, it was 6 hours and 20 minutes, okay? Anyway, I know that 80% of you are not going to do this work, you know, only a small percentage of you, and I'm honest here, you know, what can I tell you? Now, you don't need somebody, most likely you've been through a lot already, you don't need one more to, oh, good job, you know, it's not, let me be somebody who is more objective, alright, and tell you the truth, fair enough? Would you appreciate me being truthful? Or do you like, oh, I paid the course and, you know, whatever, tell me that I'm a good trader, you know. What if I ask you to open the wallet? See? You know, you cannot have fun with the wallet, right? Numbers don't lie. Okay, so moving, what's the time? Alright, almost there. Moving forward. And now on the daily, okay, it's going to be easier to spot the short-term trends. So I need to start with the most recent high or the maximum absolute high. So high to low, low to high, high to low, low to high. So connecting lows and highs. Alright, do we agree that this is a downtrend? Yes, we do. Now when you chart the first time, you're going to see low to high, high to low, higher high, right? And this would be a retracement, and then we're going to chart connecting highs and lows, not all of them, just the relevant ones, you know. And now I'm going to say, oh, this is the market wave, right? Because this low, it's lower low. So if I connect down extension to a down retracement, oh, it's up. It's vocabulary, right? But because the market wave is down, I'm saying down retracement, down extension, because I want to, you know, to be clear that, oh, it's a down, okay? Even it's making higher highs, higher lows, so it's a down retracement, okay? It's alright, it's vocabulary. If you think, oh, it's an up retracement, still good, don't worry, but just, you know, it's vocabulary. And then we have lower lows, lower highs, so now I have another down extension, right? So we have down extension, retracement, down extension, agreed? And then I would chart again, high to low, so I would see that the market broke this down market wave on NZDCAD daily chart, right? And then I can see that the market went high to low, low to high, so again connecting highs and lows, right? So the market, give me a second, red. So the market made another lower low, lower high, so it's another, so it's up extension, but then it's down extension, okay? So we need to do what? We need to readjust, right? We need to readjust. So we need to say, all right, this is the relevant high. that's the relevant low, that's the relevant high, and the market wave is extension, retracement, and then extension, right? And remember, we are looking, seeing here, it's hard highs, hard lows, but it's still above this low, so not relevant, not relevant. Once the market make an extension, all right? So if you go step by step and do this with me, chart with me, you know, it's high to low, low to high, high to low, all right, and then low to high, high to low. Is this a retracement? Do we have a confirmed short-term uptrend? No, we don't have. Very good. So low to high, high to low, low to high, high to low, low to high, high to low. So still charting. And low to high, high to low, low to high, right? Do we have a change in the short-term trend now? Yes, we do. Very good. So market wave on the daily, you know, we're going to go down to here, right? And then, can you see, everybody? The market going up, making hard highs, hard lows, until it's not making hard highs, hard lows anymore. Okay, so I'm going to delete a few things to make it better. Okay, so now just spatially, right? This is the relevant low, this is the relevant high, and if I move the chart, do we agree that this would be then the relevant low? Hard high, this is the hard high, this would be the relevant high, and if I connect high to low, low to high, high to low, low to high, high to low, low to high, can you see the change in the short-term trend? Downtrend, uptrend, downtrend again. Can you see it? Again, if you are asking, boss, why not this high? Because it's lower. That's the higher. Alright? This high, it's higher compared to this high, and this high is still lower compared to the previous high. Boss, can you repeat please? Yes, sir. That high, the most recent high that you're looking at, it's still a lower high on the market wave, but it's also a higher high compared to this high. Somebody might be asking, you know, oh, what about this high? Not relevant. Whoops. Triangle, not, where is the circle? There you go. Not relevant. The circle high, it's not relevant. Okay, if I, again, one more time, it's repetition of the concepts, right? If I do that, this is the relevant high, then I'm going to have an up market wave because it's going to break the high. All right, send me an email if it's not. Okay, you are going to have homeworks, do the charting exercises. All right, and so okay, now give me a second. Okay, now compared with the monthly and the weekly. Okay, now here I must address that on the daily chart I cannot say extension, retracement, extension. Okay, why not? Because I can clearly see that on the daily, boss, I want to be a millionaire. Every specific time frame has its own market wave. Okay, it's fair enough, the higher time frame controls the smaller time frame. Yes sir, yes ma'am. But on the daily chart, this was the relevant low. Now I cannot say that, oh, you know, I cannot say everybody this, oh, you know, this is no retracement. Okay, I need to address that on NZD-CAD daily chart the market was in a down market wave, but then the market broke the down market wave. Okay, don't confuse the monthly chart and the weekly chart and the daily chart. Most of you are losing because you are thinking, oh, it's all the same. It's not all the same. Okay, and the lower the time frame, the more challenging it gets. Every single time frame has its own patterns. Okay, you cannot win on the 15-minute chart and the 1-hour chart having a visual and trading the monthly chart. Okay, because the monthly is huge, enormous compared to the 15-minute chart. Okay, and you might be thinking that you are trading something on the 15-minute chart, 1-hour chart, short chart, most of you, but it's not. Okay, I must address that on the daily the market broke, because I can clearly see a retracement and it broke the high. Okay, and then fair enough, you know, I can also see that the market broke then this up. So we have a new, right? When the market breaks the pattern, it's not valid anymore. So this was the up extension leg. Now we have the new down extension leg, right? And let's see if we have trends in here. Yes, we do. Low to high, high to low, and then up to here, I believe, if I'm not mistaken. High, there are no lows. There you go. So this is now the, if you want to write down, this is now the most recent market wave on NZD-CAD daily chart. That's the relevant high, that's the relevant low, that's the relevant high. Okay, so we're almost out of time. This is part 1. Okay, so in the next lesson we're going to talk about how to trade those, how to trade the short-term trend inside the market wave. Right, we're going to talk about stop loss levels, what is safer, what is not safer. We're going to talk about what if you don't have enough money in the account. Okay, we're going to talk about what's the difference if you're trading the big pattern, the market wave, compared to the small pattern, the short-term trend. Right. Okay, everybody, thank you for today. Thank you for this lesson, and I'm going to post the link to the, yes, thank you too. So I'm going to post the link to the lesson. Clicking here, you know, relevant, or here, I'm not sure, here, you know, relevant, how to spot relevant highs and lows, and rewatch this lesson a few times. All right, this is Mike. See you tomorrow. Thank you very much. Bye bye.